Happy New Year, everybody. Welcome to the first show of 2022. This is the Plus3 Futures and Commodities show. My name is Ben Maldonado, and I'm here as always with Barrie Hederaki. Hey, Barrie, Happy New Year to you.
Happy New Year, Ben. Happy New Year, everybody.
Yeah, it's a good thing nothing happened a couple of weeks we took off, right?
Yeah, not much.
Anyway, a lot going on. As usual, it'll be a whirlwind, but we're gonna try and cover the most important markets and the markets that are moving. One of the ones we always look at, and 2022 should be no different as a proxy for risk, is Bitcoin. And Bitcoin continues to leak, Barrie.
Well, not like we didn't see it coming.
No. And not like we didn't have levels that were telling us, hey, if this thing happens, you can expect this. And if this happens, you can expect that. Well, we're battling at this lower level now. That was the magnet. We knew when we couldn't get over the half square that the pressure was down to this level. Well, we're here at this level now. And if we can't hold this level and we get stuck under it, and the level, by the way, all the levels are posted on our spreadsheet, which when we post the link to the video, we'll include a link to the spreadsheet as well, so you can get the levels there. This 41.7 area is critical right now. If we get stuck under that, it opens up these lower levels of 32, 33,000, and then you're talking 24, 23, 24,000. The other thing I want to point out on this chart is I added a little bit of cycle work for everyone to look at.
Mm-hmm.
High to low the last time was 69 calendar days, from the high in April to the low in late June.
Trading calendar days, right? I see.
Calendar days, and so I said, okay, the recent high here was November 10th. If we count out 69 calendar days out, where does it put us? Puts us January 18th, January 19th.
Mm-hmm.
Through other methods that I've been discussing on Twitter and you and I have been talking about, we've got some very important timing around that 17th, 18th, 16th of January. So it's interesting how this Bitcoin particular cycle lines right up for that same area where, at this point, probabilities favor that we're looking for, sort of low and risk assets around that time. We'll see how it plays out, but I thought that was interesting. Anything else to add on Bitcoin before I throw it back to you?
Yeah, well, I think it's good to mark these points just in case, when price shows up around that time at a key level, we know why it's there. We know the cycle's expiring, so we don't have to run around at the last second.
Yeah,
so
exactly.
Forward mapping is a great idea. Just not to put a trade on necessarily, but just to have it there in real time, right?
Absolutely.
And the break level for me is around 39,000. I think just right in there.
In this area here, yep.
Let's see, yeah, it's a little bit, maybe 39 and a half right in there. Probably your eighth line right there. The
eighth line's around 39.6. So right there.
3/8. So I think, if we take it out, then we're probably going to go visit the 30,000 level. Maybe that half square you got there.
Absolutely.
At least.
Yeah. And so we have timing and we got price, and now we just watch it. And if you got a position, you can manage it, and if you want to trade it, you know where the levels are to take action. Let me throw it over to you, and you can run through the big five.
Thanks.
There's the infamous ES box we left with last year, Christmas box.
Pretty much untouched.
Right.
And it's almost as if nothing happened. We're back in the same range.
Right.
But
a whole hell of a lot happened.
That's the thing, right?
Right.
A whole lot happened. So I think I think the best chart to follow might be the calendar chart, because this is the one we talked about last, I think.
Mm-hmm.
And just to pick up, if you guys this is the first time watching or you didn't catch the last show, watch the last couple of shows. We had that'll help you catch up with the storyline. And last time we talked about this square of 90, this 90-degree cycle coming up. And we were looking to see how price would react around there.
It's a good one.
It's a good one. What happened was, we got the high, then we got a false break, and that was it. After we took out the low of the false break bar, it was all said and done. So it looks, now we're back in the range here, and I would say we should at least get a 4,600, low 4,600 test in this run, at the least, and at the most probably go down and test the 1/3 of the square, down around what is that, about 4,500. And yeah, and there is an interesting trend line here that connects that square. So I think it's, that trend line is key. So I think Monday, Tuesday, if we can hang around here, it's probably more bullish. But let's say it runs down a little bit further. So if we go, I don't know, another 20 points lower, we're probably going to go visit the 4,600. So it's not that far. And if we really can't maintain right above 4,600, then probably 4,500. So that's kind of how I'm looking at it and stepping down.
What's interesting too, Barry, is when the timing comes in and you get a good hit, you can see the change in character. And we were discussing last week how, the market all of a sudden got heavy. Right. I had some short-term timing Wednesday. You had the 90 cycle, and all of a sudden things started getting heavy in there. And so as you become more aware of these cycles, you can watch them in real time and watch the price action, the character of the price action, and it sort of gives you a feel for, okay, here's what this cycle is, how it's having its effect.
Exactly. In this case, we just couldn't move the market after that first drop. We've been just sort of sideways for 2 days after the drop and just couldn't move it. And that's different, right? We haven't had that kind of stickiness before, and at a weak spot. So we'll see what happens next week. But basically, those are the levels. We had the levels from last year, and they're still valid. This 46.93 is still valid here. And I think if we can recover that right away, Monday, Tuesday, then I think we're done with the pullback. If we can't cover that in the next 2 days, and I think that square that we saw on the calendar day chart, this really came in, and we should probably be down for a while. So it's not going to be a buy the dip kind of a thing like we've had these last couple of times. This one's a little bit different in character, like you said. So let's see how much, either we got to make it up, the correction has to make up in time or price, or a little bit of both. So if we go down hard, then we'll probably make up a lot of time by selling off harder. So one or the other. Either way, I would say, to keep it simple, just watch 46.93. That's a key level to be able to recover. And anything else below that weighs heavy. And then 4,600 and 4,500 becomes targets to the downside. Want to add anything to that, Ben?
Just that I'm with you in agreement that we've got to see some upward movement, because for 2-3 days this past week, it was any move up got sold, any move up got sold, any move up got sold. And if the bulls want to make some hay, they gotta be able to start recapturing levels. The other thing, though, I did see in my review was something may have ended on Friday at the low, short term. This is completely short term. So I'm looking to see, Sunday night futures, Monday, Tuesday, do we get any kind of bounce? I think your 47.26 area, 47.50 area is probably going to be key on a bounce. If we can get up there and we get stuck under it, then I think just the next wave's coming down. Whereas if we can, capture it, hold it, and sit there, then I think you're right. The correction may be over.
Right. Yeah. It's really right in here. We need to clear the 93, then we need to clear 25, and then we should be good for, not be so heavy on the downside. So we'll see how that goes.
Yep.
And as we normally do, let's take a look at the weekly. This is kind of where we left it last week. We were watching this 3 squares up 156, saying, we really should be able to hold above it for this to continue. And this is another reason I'm saying that we should really clear that the 46, clear that 46 93 or 47.25, that area, because if we can't clear it, we start slipping below the square. And if we do that, that's not so great. We could have ended something.
Yeah, pressure could then switches to the downside.
Right, then it can switch to the downside and probably go and test this trend line down here. So that's the first stop. So it's critical to see if we can recover next week or not. I think that's kind of the key. And if we can recover those levels, I think we can be back in business, at least for a little bit longer.
Mm-hmm.
All right, let's talk about bonds next.
That's where a lot of action was, wasn't it?
A lot of action finally, right? After all this chop for months.
Mm-hmm.
Well, going back to where we left off, we were pretty much around 160. And we talked about, getting below 160 was kind of troublesome. And the next step will be 157. And, you can see, I don't know if you can maybe make it a little bit bigger. If you can see, you see this downtrend line, right?
Mm-hmm.
And you see the uptrend line here. And I had the 160.20 drawn in.
Right at the apex.
Right at the apex. And look at where the pullback ended, right? Right before the drop.
Perfect.
Right into the apex and boom. So that's why we have these levels, on the charts, just to help us kind of navigate. And after that, broke the trend line, broke the 57 level. So we're down. Well, next stop will be to check out the lows around the, the COVID lows down back there. So that would be around 153. But really, the big support looks like if 153, I doubt it's going to hold there.
Mm-hmm.
But if 153 goes, it's really around 150. That's where the next key support that I see. And I guess we'll add that to the spreadsheet. And speaking of spread, what's that?
I was going to say the lesson here, not even specific to bonds, but just any market, is don't get lulled to sleep by the big long sideways, because the moves out of those things are fantastic if you catch them.
Right. And if you get too lulled, what happens is you end up like a deer in front of lights and
right.
You miss that entry.
Right.
Like I've done, plenty of times that's happened. So you got to be on top of it. That's why these critical levels are really important, because that gives you, low risk, high probability point to attack.
Mm-hmm.
Versus just random spots. Right.
Exactly.
And all right, so that would be the bonds. Let's take a look at the actually we should be looking at the weekly bonds.
Yeah, let's see how the weeklies look.
So this is a much better picture. Let me make it a little bit bigger. So this is pretty much how we left it off last year, and we had this trend line drawn in, and here's 58.28. On the weekly basis, we talked about that being a critical level, basically 59. And, we talked about this lower trend line is important. Earlier we thought, we're getting the break to the upside. We're probably going to go higher, but we really couldn't make any hay above it, right? It just kept slipping and slipping and slipping, slipped through the lower trend line, and that was it. So now we're sort of well on the way. And like we saw on the daily charts, this low is really the next test, which is around 153, and I think fairly safe till we get down there. And if that really doesn't hold any water, then 150 really is the next level. So we'll talk about that when we get there.
Mm-hmm.
Next daily chart to jump to would be the crude chart, which we've been bullish on.
Yeah, you've had a nice rally in your crude trade.
Yeah, we got a good rally. And well, what can I say here? I think we're using the same levels. These are static levels for now. The key level to watch would be 77. I think longs we're above that. However we get there, 82 would be the next target that I'm looking at.
Mm-hmm.
And if we get under 77 for some reason, I think it'll be trouble. But looking at what happened at this 90-day cycle, we had a chance to go lower. We didn't. We hung in there. We're just kind of biting in there at the line, and we finally broke through. So I think any retest, any pullbacks holding above 77 is bullish.
Yeah.
Looking at the weekly crude chart. Again, this is exactly how we left it last week. So I should probably clean it up a bit. Well, going into the last pullback after this square up here, it came right into support. That's where this block came in. I think we drew it on the chart while we were doing the show.
Mm-hmm.
And now, we had one pullback. We're back on up. So clearly the weekly is bullish, and it looks like we're going to go back up and test the highs here. Now, at the same time, I got to throw something in here, because since we did square it on a weekly level here, we got to watch this lower high, until we clear it, until we, clear this high. It's possible this marked a much larger cycle, and this is just a pullback, and we could have a third wave down, so to speak.
It's really interesting that you have that observation, Barrie, because there's a ton of commodity charts that have that same structure.
Going back to revisit the highs.
Yeah, and so we're at that really pivotal spot where, exactly as you said, we either continuing the bull run, we take out the previous highs, or we put in a lower high, and there's a danger that we're going to get a third wave down.
That's right. That's clearly the case here, and that's why I think it's really important to watch the level for indication of balance, right? So, So for next week, 77 is really important. If we can't really maintain above that, really got to be cautious on the long side, and that's how to play this. You have to go level by level, because you can't just guess at these things. And we know there was a cycle that expired up here on daily and weekly basis, so this is no joke, and it looks good so far, but we're playing level by level. So 77 is the key, with the 82 as the target for now.
Excellent.
And let's take a look at our friend gold here. And now gold looks like actually nothing. We didn't miss anything.
Yeah, that is a market we did not miss a thing.
So again, we had 1832 as resistance, and you can see what happened in our absence. We went up to 1832 and reversed, couldn't hold it. Now we're back in the range, little box that we've had drawn out. And we had this fork up here to say, hey, we might have a little bit of a grinding uptrend, but even that has to be lowered to ridiculous amounts, because it's just, no momentum, man. There's no interest.
It's just sideways, big sideways jump.
So now at least we have this lower boundary to watch, kind of know where the upper boundaries are. So it's not, bearish by any means, because we are making higher lows up here. And I think the next signal would be, if we can really take out 1832 and get on top of it, then I think we have some legs to run up and at least test the midway, right? 1900 or around that level.
It's funny, Barrie. I was looking in my own notes on gold and silver and copper. I wrote, it's not bullish, it's not bearish, it's frustrating. For everyone, right? The bears are getting frustrated, the bulls are getting frustrated, because it's just chopping in a range, and it's a tight range, relatively speaking, a tight range too.
Very tight. Well, we've been on the sidelines watching it, right?
Exactly. Yep.
Been ultra patient here.
Sure.
Hopefully it'll pay off one day. We'll see how it goes. And so here's the weekly chart. Again, we drew in this little triangle. If you guys can see it. A while back, again, we're watching some compression over months and months and months. And, how much longer can it go on is really the question. But as you can see, the reason I said it's not bearish is look at this, we're making higher lows.
Yep.
And, lows do get bought up. And now we're at the upper range. We'll see if we can make another run. Otherwise, long as it's above 1767, which is the level in the corner here, I think we can look at 1767 here. I think above that, gold is firm.
Mm-hmm.
And if we get under that, then I think we're going to start getting a little bit negative, and we'll see what happens down here. But for now, it's firm. And you can see the daily charts. You can see it's 1832 is really the level to get taken out. So until then, we're Chopsville.
Good levels. Good levels.
Thanks. And let's take a look at the dollar. Again, this is why I love the square charts, man. Look at this. We leave it alone for a couple of weeks and everything's taken care of themselves.
Mm-hmm.
So, 1/3 square was the resistance we talked about this last couple of shows. And around 97, we thought, we've been talking about it, tapping that, and we did twice. And now we're sort of consolidating it, which is what we talked about last couple of shows. And I think I said, long as it's above 95, it's firm, right? And so this is the sort of range bound now between 95 and 97. And these aren't, the amazing thing is market ends up doing and working right between the square levels, right? So, which is just super interesting. So here it's clearly in between. And the only way the dollar is going to get weaker is we take out this 95, which at this point, interestingly, will take out this big old trend line we've had for months and months. So that point is coming up soon, one way or the other. Taking a look at the weekly. Again, this chart is a continuation from last week. And we looked at the weekly chart squaring out up here at 45. And we talked about, hey, this is going to stall for a while. It's a squared out. And guess what? That's what it did. Stalled out for a while. And didn't sell off like a hard square, but it's not going any higher. And
definite pause.
And the fork certainly held the highs. So this looks like a serious high. It kept it down for a few weeks, a couple of months actually now, right? So so I think a test of this 95 area would be healthy, and so keep an eye on that. And there is a very steep trend line that's going to catch right around 95 also, 95, 96, probably 95. So keep an eye on that. And we also look at the euro. Let's take a look at the dollar weekly. We're done with the dollar. All right, so we have the inverse. Again, the same chart. We drew up the square last week or a couple of weeks ago.
Look at that perfect fit.
Perfect fit. It's like a mirror, right? So we got the same boundaries that we had on the dollar, around 120. 120 on the lower side, and 38.60 on the upper boundary. Again, we came down hard into the half square, so it's impressive that we were able to hold it there, and no strength, below this quarter line. So really, to see some strength, we'd have to take this out, and we're putting in. By the way, we're putting in a hell of a base here, right?
Yeah.
So if we go up here, we start pulling back and holding above the upper boundary, I think, we might get a play to the upside. But, knowing currencies, we can do this for another year and be no problem.
Right, right.
So you got to be patient and watch it just to show where the levels are. They're all working out fairly well. Let's finish up with the weekly. Again, this is the exact same chart from last week. You guys can go back and check the show from last week. We had, so the 1/3 square was where we looked for support, and we had that for a couple of months. And to the upside, we did talk about this little blue line, which is, the 1/3 of the, a third, yeah, 1/3 of the fork. Mm-hmm. And interestingly, that's holding also. So we'll see how that works out. But my key level is really the half square, which is around 150. But hey, this works, it's fine. So that resistance is really around 139. 140, around 140. Mm-hmm. Mm-hmm. So that's kind of where we are, euros hit some support and consolidating, dollar hit resistance and it's consolidating. And that's kind of the story.
Excellent. Good review.
Thanks. So let me put it back to you. We'll talk about what you got there. Now here, there's a big gap between the last show and this show.
Yeah, a lot has happened. This is the NASDAQ 100 futures, the NQs. I always cover this as a sort of supplement to Barrie's work on the ES. The things that stood out to me that Barrie and I discussed this past week is NQs, while tech has been leading this bull market off of the COVID lows, they could not make a higher high. We had this high in late November, and then we had a lower high in December, while the ES and a lot of other markets went to higher highs. So this has shown relative weakness. The other major thing that I'm going to be watching over the next week or so is this trend line. This is the March 2021 lows. We've had several hits on it. Came close on Friday, but not quite to it. It's obviously a rising trend line. So each day this week, if we don't rally up out of here or bounce, there's going to be pressure from this trend line, and we're going to see if it can hold or break. This has been leading to the downside. It's been weaker than ES. And I'm watching the character of any bounce this week. If we can only get up to here and we get stuck under this half square, which is around 15,800, man, you got to look out, because then you'll have a lower high in place. You take out these lows, you'll have a lower low. Minimally, we should do an ABC, which takes us somewhere around this full square. And if things really get going, because it's a third wave, conceivably we could open up this entire square potentially down here.
Right.
Anything else you got to add on the NQs?
No, I think again, it's funny that the trend line is the key level, and if we really take that out, I think we have to go by square levels. This could end up becoming a long-term turn because of all the squares that we had at the highs. Just like we looked at crude being, we had the high in place, the lower high coming in. So I think from here on, all these lower highs have to be watched closely. And the only way to do that, well, the way we do it is to look for key resistance levels when the market rallies.
That's right. If it has trouble, getting back over those resistance, you really have to pay attention when you have a lower high, because that's the setup for the third wave. And we know what happens there. So one of the markets, there's only a few of the commodity markets I'm going to cover today. And the main reason is, as we have been discussing multiple times on this show, a lot of markets are at a major decision point. Are we going to put in a low and now go up and make a higher high? Or are we going to have a low in place and then come up and make a lower high? And so most of the commodity markets I follow are in that situation. there are three that I'd like to highlight, which I think present opportunity right now. One of them being 30-year bonds. We talked about 30-year bonds in December on multiple shows about the setup that was forming. Essentially, we were looking at this half square that basically had price trapped. It was between 63.5 roughly and this 60 level. Once we broke the 60, retested, it's been really profitable for anybody who got short or had puts on this instrument. The reason I'm showing it now is I wanted to show the weekly chart that we were reviewing in December. And the reason we were reviewing this chart was we were getting squeezed up into this timing spot right here.
Mm-hmm.
And you can see what happened once we hit it. Now with these arcs, as you can see in the past, sometimes it hits these arcs, man, and you just get a continual move for months and months and months.
Right.
Other times it comes up into it, pulls back, and then just crosses right through it. So we don't know which one it's going to be this time. We sure do know that the action so far for the 3 weeks since we've hit it has been really strong.
Mm-hmm.
So until that changes, we're looking for spots to add to positions. Now, where would you say, okay, if you're saying where's a spot to add? We pull back up into here and get stuck under here. By definition, this is what the squares are for, right? You want
Right.
price to show you this spot, right? And this is the spot. If we get stuck under this sort of 56.5, 57 area, because if you give it a little latitude, 57 area up here, that's a good spot. It'll
Right.
show more weakness. So bonds, 30-year bonds are set up. The trade is working. What you try and do is if you're catching a third wave or you're catching a very strong impulse move, is you find additional good risk reward spots to add. And that's what we're doing here now, is looking for, potential setups that just have really favorable risk reward characteristics. Anything else you want to add on this or the weekly that we're showing here?
Well, I covered the bonds, and I think it's you got to play the trend, man. And looks like a trend is starting. So stay with it.
That's right. Next market I want to cover is corn. We've been talking about corn for a while this fall and into early winter. And as you can see, it's had a really nice move. We had a very sharp correction off this move to the highs that we made. Big strong pullback, lasted months and months and months. And then we started seeing this series of higher lows, higher highs. And now we're sort of in a full-on bullish trend where what we like to see, again, when you're trading with the squares, what you like to see is, all right, price comes up, it approaches the square, you get a pullback. Approaches the square again, we get above it, the pullback stays on top. And here you have it. Now we're set. As long as we stay on top of this full square, which is in the, what is that? About 590 area, you've got probabilities favoring you're going to test the half square here, which is around 625. And if you successfully hit that, then you're looking at a full square move up to around 660. So corn is in a very bullish position. There is a crop report coming on Wednesday. I suspect with the price action we've seen for the last 2-3 weeks, the report coming out is going to be very bullish for soybeans and very bullish for corn, because we've just seen this accumulation all the way up for the last month or so. I mean, look at the month of December.
Right. Great month.
And every time it took a hit, they bought it up, both intraday and then obviously week to week. Anything else you have to add on corn?
No, just to, again, same song, right? Stay with the trend and trade the trend.
That's right. And the last one we want to cover is beans. Beans, a lot like corn. It's interesting. Beans was the big lag going into this low. Beans was the laggard, right? It was the weakest performer, relative strength in terms of the grains. It had pulled back the most. It sort of had, fits and starts trying to get out of here.
Mm-hmm.
But now, look at the trajectory of beans. This is the star right now in terms of performance. But again, it's the same type of situation. We came into support. Here we came down. False break at the low, right on support. Classic move in currencies and commodities. And this started the uptrend. Now we've seen higher highs, higher lows, sitting on top of squares, pushing up again, pull back. Now we're back above the square, closed right on the half square on Friday. I don't know what the crop report is going to say about soybeans, but it looks to be very, very bullish by the angle of the move and the buying that we've seen come in on any weakness. So very bullish on beans, very bullish on corn, and bearish right now on the 30-year. The rest of the commodities, it's really a decision point where we're either going to make these lower highs and have a really good opportunity to sell them, or they're going to push up, make higher highs, and start the next leg up. I mean, the softs are all in that position. Crude, which we talked about, nat gas, all of them are looking gold, silver, waiting to break out. The sweet spot is really like beans and corn right now on the upside, and the 30-year bonds to the downside.
Right.
Anything else to add on any of the commodities here?
No, just no. I think that's a good, quick coverage. And for you guys, the people listening, if you guys like the show, like what we're doing, hit the like button and maybe share, and also the bell for alerts would be nice. So, yeah, that's pretty much, yeah. Well, what about the monthly? Are you doing the monthly this next weekend?
Yeah, next weekend we'll do the monthly review. We'll kind of combine it with an annual monthly / review and give you the bigger picture view again on all these. But I thought this week it was important that we updated our stuff and showed you a few markets that where setups are, and we'll get into the monthly show next week where we'll look at the big picture.
Sounds good.
All right, everybody, have a great week. Have a great 2022. And one thing we can say for sure is that our cycle work says it's going to be volatile. So having the levels, be willing to trade, be willing to reverse positions is key this coming year. Flexibility, I guess, is a word that sums it up. Be flexible and be ready to go either way, depending on what your levels tell you.
Right. Good advice.
All right. We'll talk to you next week, everybody. Take care.
Thanks, Ben. Thanks, everybody.
Thanks,
Bye-bye.
Barrie.